Time to bring in our panels to discuss the very latest for the fintech space following the earnings from PayPal. Also, SoFi, Ted Rossman is with us, and senior industry analyst at Bankrate, and Noah Hammond, CEO of Advisor Shares. Noah, I'll start with you. Some of your thoughts, we think about the buy now, pay later, how people will be spending. Are there any things from the takeaways of the earnings of PayPal or consumer behavior telling you a story?
Yes, their transactions are growing. Their customers are growing. So they're seeing growth all the way around, and they're seemingly taking it from credit card companies, from traditional banks. And then based on the estimates that have been updated, it seems like more growth ahead and a lot more integration across different platforms. The announcement of OpenAI and PayPal is huge news and a huge opportunity for PayPal.
And then, Ted, I was looking, when I think about buy now, pay later, I can't believe how they're moving into travel and dental and medical and dining, and not just for interest-free payments over 6 weeks anymore. They're getting pretty confident in buy now, pay later. What does that tell you? Do you like that or not so much?
It's really meeting consumers where they are right now in terms of people are worried about inflation, they're worried about tariffs, they're worried about high interest rates. They're worried about credit card debt. Buy now, pay later has portrayed itself as the antidote to that you can split it into installments, there's predictability, you know exactly how much you owe for exactly how long. We are seeing increasing pushes into the physical retail world, into services like the categories you mentioned, travel, dining, medical, dental, veterinary. Buy now, pay later is still in the fairly early stages. There's definitely a lot of room for growth ahead.
When you think about these names like PayPal, we talked about the OpenAI deal. They'll be the first. They'll be in the payments wallet and the ChatGPT. Noah, you mentioned that briefly. Is PayPal a name that you like when you look at the stock?
Well, it's been a tale of two different, performances for these stocks between PayPal and SoFi, right? Up until the announcement of earnings and the ChatGPT news yesterday, PayPal's not been a great stock. 1 year down about 7%, across 3 years the same. SoFi, on the other hand, year to date's up over 100%, 1 year up 160. So a dramatic difference in the performance returns. But as a bit of a contrarian, it tells me there might be some significant opportunity investing in PayPal stock.
And then, by the way, I did see Sam Altman did note about going public, and maybe that the IPO route for OpenAI, Noah, may be the way they have to go. What do you think of that?
It'll be interesting, right? It'll be one more example of seeing how the public markets value these AI companies. I'll be curious to see if it's at the same levels. But given their growth, I think what I saw with the PayPal news is that's access for PayPal to roughly 200 million users on ChatGPT, obviously one of the leading AI providers. So I think going to the public markets will be interesting to see where it's valued, but probably also good for ChatGPT as well, so they can use the equity markets to continue to fuel their growth. But again, great opportunity for PayPal to integrate more with them.
And Ted, we did see SoFi jumping. The stock's up over almost about 5%, moving to some new highs. They said that SoFi's on fire. People are clicking away. SoFi doing so great here over 6 months, up 135% plus. When you look at how people are behaving and what they put, forget about buy now, pay later. How are they doing on paying back credit cards and auto loans? Because I'm sure some of these credit cards still have some really high interest rates. Are people paying them back? Is there a big picture takeaway here?
Banks don't seem overly concerned about delinquencies for credit cards in particular. The average interest rate is high. It's around 20%. The job market, though, is still pretty good despite some weakening. We saw a big run up in credit card delinquencies a couple of years ago, and a lot of that was sort of the end of the pandemic stimulus. People depleted savings. They took on debt. Since then, delinquencies have pretty much leveled off, and we're seeing a similar phenomenon in the auto space. Auto lending's a little more of a concern, especially in the subprime space, as auto prices are just so much higher these days, and some people are having trouble keeping up. There's generally a feeling, though, that the worst is behind us, and unless there's some unforeseen greater weakening in the job market, banks are feeling pretty good. They've trimmed back a bit on lending to people with lower incomes and lower credit scores. The prime consumer is still in pretty good shape, despite gloomy sentiment.
noticed Square or Block or XYZ is what it really is. That was something that people loved when we talked about fintech. It had a cash app and people were all hot on it. Sort of is not in our conversation anymore. Why is that? What else do you look at here, Noah?
Well, I think XYZ or Block, as you said, is a great opportunity. They're seeing growth as well. You're seeing it with several companies in the buy now, pay later space. So this space seems to be growing. They're obviously competing very aggressively. Where you want to maybe look for leaders are looking for the ones like the PayPal news where they're establishing partnerships. So I think there's a lot of opportunity in a lot of the stocks in this category. We're certainly talking about these today because of the great numbers that they put up, but I'm expecting probably more good news for some of these other companies as well.
I also see a lot of, by the way, overweights and $90 targets, above where it is here today. What about a name like Klarna that now launched premium and max memberships with cashback, travel perks, subscriptions? Is this going to be something people sort of sink their teeth into, Ted?
Yes, what Klarna's doing, and you can also say the same about PayPal and SoFi, they're following a similar playbook in the sense that they're trying to be this super app that's kind of all things for all people. You can pay now, as in debit. You can pay in weeks with that flavor of buy now, pay later, or even a credit card. You can pay in months. That could be the credit card angle. That could be the longer term buy now, pay later. We're still in the fairly early innings of this transition. There's actually still a surprising amount of commerce that still takes place through antiquated methods like cash and checks. You think about paying a lot of home service providers. I paid my daughter's preschool this week with a check. My life insurance company just recently unveiled a website. A lot of business-to-business payments are still through old methods. There's a surprising amount of room to run on a lot of these trends.
Well, it's great to see you both. God, you paid off the school, right? I know your kid's going to be super smart. We got to take care of that stuff, too. Just the regular stuff can be so overwhelming sometimes. Ted Rossman, Noah Hammond, great to see you both today on a record-setting day